Hello, this is our weekly market alert video for the week ended Friday, September 24th, 2021. And boy, howdy, was last week a roller coaster ride extraordinaire. Hopefully you guys got our video on, I forget the day now, but when we had the 500-point drop on in the Dow. And we hope that that brought you some peace of mind that, yes, it is a bad day, but no, the sky is not falling, and no, it's not the beginning of the next bear market. And so as it turns out, that video for the time being was correct. And so that's why we do that. We want you to have peace of mind. We don't want you to worry. We want to do the worrying for you. So we hope that that served its purpose. So this video is basically going to be a reiteration of what we discussed in the last video we sent out. The issue in China, of course, is the Evergrande, which is one of the largest real estate financial institutions in China, and they're missing out on their debt payment. And there's a big concern that if they collapse, that will be China's Lehman moment, where the stock market and the economy in China are all sucked down into this quagmire. We don't believe that's going to be the case. The People's Bank of China gave them some money, despite what the president of China said that they would not do. They renegotiated their deal with the people they owed money to. And so they've been given a reprieve to figure it all out of some time. And so we think that'll take care of itself. The other issues that we've discussed remain the same. The inflation picture is not good. But I guess the positive news is that the high inflation is going to give Social Security recipients a nice big raise come January. So there's a silver lining there. But the supply chain issues with the pandemic and the virus are creating issues. We saw, in fact, today that Nike's stock is down dramatically because a lot of the factories that make their sneakers in Vietnam are being shut down due to the virus. And therefore, they may not be able to meet the demand over Christmas for selling all their sneakers, and that could hurt their profits. So there's still a lot of that stuff. The supply chain is still an issue. It's causing inflation. The Federal Reserve is still on the sidelines saying they're going to be helpful. They're not going to raise interest rates. So the environment hasn't changed. One thing that is, and therefore we continue to say that we are going to climb to new all-time highs later on this year and into the next year. We still see that. Now, it's going to be a bumpy ride, particularly because we do have the movie that I think we've all seen so many times, and we already know the end, and that is the whole debt ceiling thing. And so there's going to be a shutdown, probably, we don't know that for sure, but they might get to the point where they're going to shut down the government, and they're going to threaten all kinds of terrible things. But in the end, as we've seen in 2011 and many other times, the end of the story is that they will come to a deal. They're not going to let America go bankrupt and destroy our economy and create all kinds of havoc. So if we do see a down caused by anxiety over the debt ceiling, we consider that to be a buying opportunity, not something to get overly worried about. So the forecast looks pretty good in terms of where we see the stock markets, the S&P and the Dow going from here. It'll be a bumpy ride. But again, we don't have a crystal ball. And the thing that always causes bear markets is not what everybody anticipated. It's usually what people did not see coming. It's much like a boxer. They can get hit by a lot of punches that they see coming, and they can brace for those. And yeah, it hurts and all of that, but it doesn't knock them out. It's usually the punch that they did not see that knocks them out. And it's the same thing with what happens most of the time with bear markets is something comes out of the blue that people were not anticipating, and that's what causes everything to turn upside down. So we don't know what that'll be because it comes out of the blue. And that's why we have our invest and protect strategy, because you got to have a strategy in place to help beforehand. You don't want to create it while you're in the middle of all the stuff that's going on. So we hope you have peace of mind from the fact, knowing that we have our protect strategy ready to be implemented should there be a major threat to your financial well-being. We want your money to last as long as you do. We want you to enjoy your second childhood without parental supervision. And anything we can do to make that happen, we want to do. So once again, thank you for watching this video. By the way, subscribe to it. You can do so on our website. You can do so by clicking. We want as many people to get this video as possible. So share it with your friends, share it with your family. We want as many people to benefit from our message and to have financial peace of mind and for their retirement to be successful as possible. And you can help us do that. So feel free to forward this and share. In the meantime, thank you for watching this video, and we will talk soon.